right? So you should be keeping in mind that this is the amount that you should be keeping aside so that you can be replacing the asset, and that is the amount you have to keep aside for the replacement of the fixed asset. And we do create a sinking fund for the same. Now, what is the concept related to sinking fund? It's basically concept related to annuity, where you basically going to put a fixed amount at a regular interval. Let's say if I'm putting rupees 10,000 every year and keeping it all at all side, right? So that I can be having a fixed value at the end of 10 years. Let's say I want to have an amount of rupees 5 lakh at the end of 10 years. So in that scenario, what amount I should be depositing? What amount I should be depositing at a regular interval of 1 year, so that I can be having a sum total of rupees 5 lakh rupees at the end of 10 years. At the end of 10 years. This is said to be what? This is said to be the sinking fund. We say it to be the sinking fund. Okay. And its calculations are based upon the annuity formulas. Annuity formulas. So when we'll be covering the chapter for the annuity, interest and annuity, definitely we will be solving the numerical based upon it. Right now, I'm going to give you the idea related to it, that we are going to keep aside that particular amount. We have to deposit that particular amount at a fixed, let's say, interest rate. Let's say it is 10% interest that you are earning right now. So we are basically, the future value is known to us, that we know that we want a future value of this much amount with us, or such corpus is required after some time, right? So what amount is to be deposited for this particular regular intervals, so that we can be having that particular amount, that's said to be what? That's said to be the sinking fund. So organizations set aside the amount for that particular purpose, and that is a sinking fund. For that particular purpose, the sinking fund is created. Okay. And you just invest that particular amount into the saleable securities, readily saleable securities, and that's it. Okay. Further, it's related to the accounting entries. Now, the depreciation is to be charged to some asset. Now, asset is related to what? Asset is a real account or something. Whenever I'm talking about an asset, it's a what type of account? It's a real account. It's a real account. And what is the golden rule for the real account? Very easy. Debit what comes in, and further credit what goes out. Or simply, I can tell you that if we want to increase the value of the asset in our books, we are going to debit it. Let's say you are having rupees 10,000 with you as cash. So your cash balance will be showing, cash book will be showing balance of rupees 10,000 debit, because it is an asset. And when you are going to increase this value, let's say you received rupees 50,000 from the buyer, right? So you have to increase this value. You'll be debiting it again. So we'll be debiting rupees 50,000 to it, so that the balance can be increased to 60,000. Again, it will be a debit balance. So when we are having the debit balance in the cash book, it means you are having an asset with you. You're having the funds with you, right? So that's the case. Is that clear? So whenever we are to increase the value of the asset, we debit that value. We debit that value. And whenever we are to reduce the value, we credit that value to the account. Then we do credit the value to the account. Okay. In case of depreciation, the value of the asset will increase or decrease? Very easy question, right? And very logical one too. In case of depreciation, we are charging something to it, that its value is gone. We are going to reduce the value. So as to reduce the value, we are to credit the asset value. Okay. So that's why the asset account will be credited. The asset account is going to be credited, right? Getting the answer to it? So whenever we are to increase the value of the asset, we are to debit it. When we are going to reduce the value of the asset, we are to credit it. And further, depreciation account is what? It's an expense account. We say that depreciation is a non-cash expense. It's an expense account. And what type of account is expense account? It's a nominal account. expense account is a nominal account. And what is a golden rule for the nominal account? Debit all the expenses and losses. So if there are any expenses or any losses, those are to be debited. And if there is any income or gain, those are to be credited. Then those are to be credited, right? So that's why it is to be debited. Understanding this accounting entry, journal entry here, do confirm. Okay. And once you have charged the depreciation, now your depreciation account, which is a temporary account. Why temporary account? Because it's a nominal account. All the nominal accounts are the temporary accounts. All the nominal accounts are the temporary accounts. And the temporary account is to be transferred to the profit and loss. That's the case. So that's why we are to reduce the value of the depreciation account at the end of the accounting period, at the account of the accounting period, right? That's why we will be crediting it and we'll be transferring the balances to the profit and loss account. Is that clear to you? Is that clear to you so far? Please confirm, right? So this is how the accounting entries are to be passed. And after the asset's useful life and all the depreciation is charged, the asset value in the account or asset account will be approaching toward the residual value, right? So whensoever a depreciation is charged, the asset account is to be credited, the depreciation account is to be debited, and when the year ends, accounting period ends, in that scenario, the depreciation account is to be credited and the profit and loss account is to be debited. These are the accounting entries, journal entries for the depreciation. Now let's solve questions based upon the depreciation. It's almost the end of the chapter now, and we'll be solving the question based upon it, and that would be it. So the question number 1 here, it says, on January 1, 2000, Messrs ABC purchased a plant costing rupees 41,000, spent rupees 4,000 on its erection. The estimated effective life is 10 years. Scrap value is 5,000. Advise the depreciated value of the plant at the end of the third year under the straight line method of depreciation. We want to tell the depreciated value. We want to tell about the depreciated value. And the depreciation is to be charged on what amount? It is to be charged on rupees 41,000. Further, we spent rupees 4,000 for its erection. So it is 45,000. But the depreciation is to be charged on the after reducing the scrap value in case of the SLM. So in case of SLM, the depreciation amount is to be charged on 45,000 and the minus the scrap value, that is 5,000 over here. So it is 40,000. The amount where the depreciation is to be charged is rupees 40,000, right? So the depreciation amount would be related to what? Because the useful life is given to be 10 years. What will be the rate of depreciation? If we are to calculate the rate of depreciation, what would be that? The rate of depreciation would be 100% divided by the useful life, that is 10%. Or simply we can say the depreciation amount would be 40,000 divided by 10, that is 4,000 rupees per year. That is the depreciation, right? Now we have to tell the depreciated value at the end of the third year. At the end of the third year, we have to tell the depreciated value. What would be that? That would be depreciation for the first year, depreciation for the second year, depreciation for the third year. Means 4,000 multiplied by 3, that is 12,000 rupees. Means 12,000 rupees. And the total value you were having what? The total value of the asset is recorded to be 45,000. So it is 45,000 minus 12,000. So the depreciated value will be 33,000. Right? Is that clear to you? Kindly confirm if I have understood this numerical. Now, after that, let's solve another question. X and Y, X and Y purchased a second-hand machinery worth rupees 8,000, and this 8,000 rupees machinery is purchased on April 1, 1993. Rupees 3,500 spent on overhauling and installation. So 8,000 plus 3,500. This is a total cost. So it is 11,500. Depreciation is to be written off at 10% on the original cost. See, they have not mentioned the particular methodology based upon which the depreciation is to be charged, but they have told you in the question itself, because they said that the depreciation is written off at 10% on the original cost. And in what case the original cost is taken? In case of the SLM method of depreciation. So in case of this also, the SLM method would be applicable. On 30th June 1996, the machine was found to be unsuitable and was sold for 6,500. So we bought the asset on 1st of April 93, right? And we sold the asset on 30th of July, I'm talking about. Not June, it is 30th July 96, right? So we are to tell that whether it was a profit or loss, or what loss is to be written off, that we need to tell. Okay, so for the first year, it would be related from the 1st of April 93 to 31st of March 94. Then for the next year, it would be 1st of April 94 to 31st of March 95. Then 1st of April 95 to 31st of March 96. Then further from 1st of April 96 to 30th of July 96, right? So these are the 3 full years. These are the complete years. So 12 months, 12 months, 12 months, and 4 months here. April, May, June, July, 4 months are there, right? So we have to calculate the depreciation now. So depreciation is to be charged on 11,500, and at what rate? At 10%. So the depreciation would be 11,500 into 10%, that is 1150 in the first year, in the second year, in the third year. For the fourth year, the depreciation would be 11,500 multiplied by 10% multiplied by 4 divided by 12, because it is to be charged for 4 months, right? So 1150 multiplied by 4 divided by 12, that is 383 rupees depreciation is to be charged. So the total depreciation would be, that would be equal to 3833. So this will be the total depreciation for this period, right? So what will be the net book value? Net book value will be 11,500 minus total depreciation of 3833. That is 7,667, right? So the cost price is 7,667 and selling price is 6,500, I guess. Yes, it is 6,500. So there is a loss of 1167. So this amount is to be charged to the profit and loss account. Because they have asked in the question that what amount is to be written off. It is 1167 which is to be written off. Is it clear? Now, let's solve another question. It says a company purchased machinery worth rupees 20,000. A company purchased machinery worth rupees 20,000 on January 1st, 2000, which is depreciated at 10% per annum on the original cost. Company has purchased machinery worth rupees 20,000, right? and depreciated at 10% per annum on the original cost. On July 1, 2002, the machinery was sold for rupees 12,000. What is the amount of loss written off assuming that the books are closed on December 31st? Now they have clearly given that we are considering that the books are closing on calendar year basis, not on financial year basis. So we purchased the asset on 1st of January 2000, right? And we sold it on July 1, 2002. So 1st of January onwards till 31st of December 2000. 1st of January 2001 to 31st of December 2001. 1st of January 2002 onward to July 1. Let's for 1st July 2002. So here complete 12 months, here to complete 12 months, and here are complete 6 months. Okay. And it is said again that is that depreciation is to be charged on the original cost. It is to be charged on the original cost. Means straight line method of depreciation is to be used, right? So the depreciation for the first year, it is 20,000 into 10%. It will be all same for all the years because it is charged on the original cost. So it is 2,000 for the first year, 2,000 for the second year, and 1,000 because it is for half year. So the total depreciation charged is 5,000 rupees. So the NBV at the point of sale would be 20,000 minus 5,000, that is 15,000 rupees. So the selling price is 12,000 and the cost price is 15,000. That is the cost in our books right now. So it is minus 3,000. Minus 3,000 means loss of 3,000 rupees. Means there will be a loss of 3,000 rupees, right? Now, that would be all related to this particular video. I hope that you must have understood the concepts related to the depreciation and all.